what happens when you take a loan for an investment? That investment doesn't work out, but you manage to get part or a huge chunk of the money that you invested back. So you're caught between paying that loan or doing another investment. What should you do? I'll take an example of Brandon. Brandon took a 5 million loan to buy a brand new matatu. By the way, this is based on a true story. So Brandon took 5 million in a bank that is offering 19% as interest, and the loan is going to go for 12 years. He used this 5 million, actually part of it, that is 4.7 million, to buy that matatu. It's a brand new matatu that was imported from Japan. So you know what I'm talking about. The 4.7 million is the cost of the matatu plus these other things, insurance, and these other payments and licenses that you need to get. So try this out for 3 months. He realized there was something wrong with this matatu, plus it's an investment that he doesn't want to do. Following up with the company that sold him the matatu, he found a way to get back 4 million. So he gave back the matatu, got back 4 million. By now he has lost 700K, which he's okay with. He's okay with losing 700K. At least he managed to get something back, which is the 4 million. So Brandon is asking us right now, what should I do with the money? Should I pay off the loan? Should I do another investment? Should I invest in a bond? Because he heard about bonds. Now, there are 3 scenarios that I thought about in Brandon's case. The first one is, of course, pay back the loan. You took a 5 million loan. You managed to get 4 million back, and you still have the 300K. Well, you might have the 300K. Probably you ate it, but at least you got back the 4 million. So the first option is pay back the loan. In fact, this is the best option, because think about it. If you pay back the loan, you'll always get another opportunity to get another loan. You managed to get a 5 million loan. So if you pay back this loan and you don't have any, in this case, Brandon doesn't have any investment in mind, why not just pay it off? And once you think about another investment, you can always get another loan, right? So in this scenario, going back to the original payment terms, when Brandon took a 5 million loan that was to go for 12 years, 19% reducing balance, this is a reducing balance loan, every single month he was supposed to pay 88,368 for 12 years. Just by the way, I have a loan tracker in case you're interested, one that does this reducing balance calculation that you can use to track your circle loans or your bank loans. Link is in the description. Consistently, 803.68 days. So for him, he had in mind the thought of he can manage to make this from the matatu sector in a month. I don't know if it's possible. Probably he did the math and realized, okay, this is not possible. Let me just return the matatu to get back at least what I can get. So this is how much he should pay every month. Assuming that he's not going to pay back this loan, he has to find a way to pay this money on a monthly basis, assuming that he does another investment. But in this case, Brandon is paying back this 5 million. But guess what? Brandon has 4 million, which he got back by returning the matatu. Plus, he also has the 300K that he didn't touch because he only bought the matatu. Like the total cost was 4.7 million. So there was that 300K, which I'm representing here as negative 0.3. So if he adds up that 4 million with the 300K, he has 4.3 million. So the only money that is going to remain is the 700K based on this 5 million. And this is a loss that Brandon has accepted, and he will pay this back. He's accepted this. In this case, no investment, just paying the loan with the money that he currently has so that he can forget about everything else. The second option for Brandon is to, okay, you remember the 300K, the excess 300K that he had, he can decide to start a business. He identified a farming business back at home and also doing a business and also opening up a business for his wife. So the 300K is gone. Now, the 4 million that he got back from this matatu, he was planning to invest it in a bond. So let's look at the calculations and see whether putting 4 million in a bond is worth it. I used calculations for the most recent bond, that is not the most recent, but there was an infrastructure bond. He was thinking of investing in one of those bonds, the infrastructure bonds. If you type in the 4 million, 12 years, because the bond was to go for 12 years, around 11.8 years there, so that's 12 years. The interest rate was 13.98%. Remember, for the first 6 years, he's going to be making 46 for 60 every month. And for the next 6 years, he'll be making half of this. This is 23 for 60 per month. Anyway, the most important thing to note here, in as much as this may not make sense, is that if he was to put this 4M in a bond, buy the infrastructure bond every single month, okay, bonds pay out every 6 months. But in this case, I used the 6 months interest and recalculated it backwards just to give an estimation of how much Brandon should expect from this bond on a monthly basis. I hope you get that. So around 46 for 60 is the income that he's going to get from this bond. Every single month, he's supposed to pay 88,368. So this is a shortfall. This is not a good investment option, putting this 4M in a bond, because the returns are less than what he's supposed to pay per month. So it doesn't make sense. He's going to go at a loss. Okay, another thing is that he's going to receive this interest every 6 months, like in any typical bond. So he has to find ways for the first 5 months to pay for this bond. He has to wait for around 5 months to even get money for paying for this loan, rather the loan, not the bond. So this is not a viable option, Brandon. Just leave this out. But probably this part here is a good idea. Now, the third option that Brandon can consider is, you know what? Use the 4M that he received back from the matatu, pay off the loan. So now he has to think about 1 million that will come out of his pocket to pay for this loan. And the 300K that he remained with initially, he can do the business. He can open a business for his wife. He can do the farming business that he was thinking about. So at least now, he only has to think about 1 million. So where will the 1 million come from? I think, Brandon, you'll manage. You'll find a way to pay for that loan. You can negotiate for that loan, because once you pay this off, it's going to reduce the interest that you're going to pay on this loan. Remember, this is a reducing balance loan. So if you have this 4M and you just make a huge chunk payment, 4 million in this case, you only have 1 million, and the interest is calculated on the 1 million, which you can decide to pay. So whenever you're thinking about a loan, using a loan to make any investment, look at the interest rate at which you're going to pay for that loan. Assuming that he got this loan from a SACCO that was offering around 12%. 12% is a good number. 12%. If it was 12%, then it might be worth considering. Brandon would have paid around 4.4M as interest only. When you compare that to this bond, he would have made around 5.4M. 5.4M there. And there's that difference of 1 million benefit. But is it really worth it? If you are Brandon, how would you go about this? Is there an option that I didn't mention here? What would you do differently? Which option here would you consider? Or what other option that I haven't mentioned would you consider that you think is the best scenario? I'd love to know your thoughts on the comments. Like this video.